Well, as bad as pretty much so many things were in the first quarter, it wasn't as bad for anything as it was for oil. The price of oil down 67%. You got two things going on, of course. You've got a market share price war between the Saudis and the Russians, and now the U.S. after its own companies, Exxon and the bigger ones, against the smaller ones, according to Scott Sheffield of Pioneer. But you've also got global demand disruption, maybe 13 to 20 million barrels a day being taken offline. Oil at $20. The problem is, what happens when oil storage runs out and it is starting to fill up? Let's talk more about this side of the story and bring in Clay Seigle with Vortexa. They specialize in offshore storing oil on ships. So Clay joining us now. Clay, it's a pleasure to have you on. The fact that so many ship owners or oil owners are willing to pay ships high rates, because rates have gone up, to store oil offshore says a lot. Where do we stand in oil storage right now?
Yep. Hi, Brian. Thanks for having me. We think that there's about 500 million barrels of available capacity on tankers worldwide. Is that a lot? I mean, that holds about the same amount of oil that we had in onshore commercial inventories at their highest point a couple of years ago. So it is a lot. The question is, what does that buy us in terms of a buffer to balance this very skewed physical market that we're seeing today?
Yeah, well, the stuff I'm reading onshore suggests we're probably anywhere from 30 to 60 days, roughly, between pretty much filling up every tank, every pipe, every bathtub in the United States. But when oil is in contango, fancy word meaning prices are expected to rise, it pays to pay these ship owners. When or if does that turn around, Clay? At what point does it become uneconomical even to store oil on a giant super tanker and let it sit at anchor somewhere in a harbor?
Part of it is the arbitrage that you described, and part of it is the fact that the supply chain all around the world is just backing up and seizing up. So it really, I mean, the time scale that you're asking about depends on the size of that surplus and whether the freight and the futures markets can keep up with the physical market. So we've done some calculations. By the time floating storage really begins to fill, we think it would take about 7 to 9 continuous weeks to fill. So in theory, by early June, maybe late May, you could fill that 500 million barrels of floating storage capacity. In real market conditions, it probably won't play out exactly like that because it won't be continuous. So remember, it largely depends on that differential between that time spread in the futures market, the contango, and the cost to carry. Sometimes that arb will be open, but then when freight rates increase, it'll close. So instead of a straight kind of slope up for floating storage, think more like a stair step or a zigzag higher.
Yeah. Well, they have. We had a guest on about, I don't know, my days are fading into each other, Clay. Maybe 4 to 6 weeks ago, called Randy Givens of Jefferies. He recommended a number of oil tanker stocks. Most of them are well up, and this was before, of course, coronavirus really broke out, because their freight rates were up for a lot of different reasons we don't need to get into now. The tanker rates have soared and the tanker stocks have done well. How much more price increases do you think the market can bear?
There is room for freight to go higher, certainly, and that's our baseline expectation for what we're going to see this spring. And keep in mind, too, it's not only the super tankers that are associated with crude floating storage. We're seeing some really unusual patterns in those cargoes of refined products. So last week, just as an example, we started seeing gasoline cargoes that had been heading for the United States switch direction mid-ocean and head for storage locations in the Caribbean, Singapore, Amsterdam. It's expensive to pull a 180 like that mid-ocean. So when we see moves like that, we think the market conditions have deteriorated so much at the original destination that it's basically worth it to reroute them into international storage. So, and then another really interesting to watch is jet fuel cargoes, because we've seen barrels that were supposed to go from the Middle East and India to ports in Europe. They're getting moved around. They're getting sent into storage in places like the Caribbean. And what's really interesting, Brian, is that they're taking the long way. Okay, instead of cutting straight through the Suez Canal, they're sailing all the way around Africa to deliberately postpone their arrival. That's actually a version of the floating storage play, right?
It's amazing. I mean, the arbitrage, what they're doing, and you can watch it on Tanker Tracker. Some of these names are like, why are they doing that and going here? A fascinating side of the story we don't talk about a lot. Clay Seigle of Vortexa. Clay, great stuff. Keep us informed. Thank you very much.